It wasn't that bad. I had like 3 more problems on that one.
No, that has more problems.
I'm going to go over 5 in chapter
Well, I'm
10
almost
today,
done with 9. I only
because
have
our last one in chapter 10 probably will take us at least 20 to 25 minutes. The last one we'll work through. It's a lot of journal entries, so I want to spend some time on that. In this chapter, we're going to go through 6 problems here. Let me just kind of give you an overview. I don't know if you had a chance to take a look at chapter 9, but this is depreciation. So what we're taking a look at here is depreciation of fixed assets, and then also we'll talk about intangible assets in just a second here. But the first, the fixed assets. So we depreciate things like our car, a building, those type of things. There's several ways to depreciate those. We're going to talk about 3 tonight, and we're in our last problem we'll do right here. We hit those 3. So there's the first is a straight line method. Straight line basically meaning, okay, I bought a car for $30,000. I expect it to be worth $5,000 in 5 years. That's my salvage value. Okay, so that gives me $25,000. I'm going to depreciate over 5 years. In straight line, that is $25,000 divided by 5 years gives me $5,000 a year, and that's how we're going to depreciate that. Real simple. Any questions on how we do that? So that was $30,000, and then I'm taking away the salvage right here, giving me $25,000 left over, and then I would divide that by 5, which gives me $5,000 per year. Now, taking a look at this, we'll go into, and I will talk a little bit about it once we get to that number there, which is doing it by units. We'll talk about that once we get to that problem. I'll do this one here real quick in the double declining method. I don't know if you got a chance to see that. So the double declining method basically says, okay, so what percentage are we doing it by each year on a straight line? So what percentages are we doing this by each year? How much are we depreciating this over? There's a couple ways you can figure that out. Basically, I think this is that.
What was it, 20%?
Yeah, 20% exactly. So in 20%, that's how much we're depreciating in year 1 through year 5, all the way down to year 5. That's what we are doing. Oops, that's 5, not 2. So we're depreciating 20% each year, all the way down. Now, in double declining, the difference is now we're going to double that each time. So we take it by 40%, 40%, 40%, 40%. Now what you'll notice here is we will take it down to, and maybe even below our salvage, but that means we can't, that last year, we're not going to be able to depreciate very much. And so we'll talk about some of those in a minute here. So on this one, we have 5,000 each year, right? Now if we do the double declining, we'll start at the 30. I can't get below 5. So on this one, how much am I going to depreciate that? Oh, we need some help on that. So it's 12,000. So I'm taking 40% times the 30. All right. And so it gives me 18 left. So I need 40 times 18.
What do you get, 18?
What's that? What I have left over.
Oh, okay, gotcha.
Yeah, so the 12,000 out each year. So I've got 18,000 left over. So I've got 40 times 18 would give me 7,200. That's not right? You have a calculator on it? So it should be about 7,200. The math is right in my head. So that gives me 19,200 that I've done so far, minus the 30,000. So it means I've got 10,800 left over. And so I will take the 40% times that. And that would give me somewhere around 4,000. 4320. So 4320. So if I have 4320 here, that gives me 6,480 left over. And that'd be 40% of that one.
22,590.
Now see, what I'll do on this one here is that I will not take, I can't go below 5,000 because that's what we stated was our salvage.
Oh.
So basically I will just take it to that, so I'll do 1,480. That'll be it.
Okay.
And so, because I said this is what's going to be worth at the end. When I depreciate everything, that's my salvage value that I'll have. And so we just take it all the way down to that point there. Makers is a little different. We're not going to talk about that in this chapter as much. And there's also there's a few other ones that they can do also. And so up to the company to kind of choose on how they want to do it. A lot of companies will choose to do it a little earlier, to take that depreciation a little earlier for tax benefits, because you want to take it sooner rather than later a lot of times with tax benefits.
So that's just basically a paper trail, it's not really anything that they're actually doing with the vehicle?
No. Yeah, it's basically how we're depreciating that asset.
Okay,
Yeah.
finding out what the value of.
Yeah, and so that's what we are showing as the value of the books, on the books, what our value of that vehicle or whatever it may be is. And so, now remember when we looked at everything, it was a contra asset account. So it takes away from an asset. So if I have a car, I have an accumulated depreciation, it accumulates, it takes away from that, that's a credit balance. So I have my car for $30,000 and it keeps adding more accumulated depreciation until it gets basically a value of $5,000. That's what I stated it would be as my salvage.
Do companies state what they want their salvage to be, or is there
Most of the time they have a pretty good idea of what it would be. And what basically you can sell as scrap or something like that. Or if you had a machine or something like that may be worth at the end of all this. So they have a good idea of kind of what they would have because of past, what they've used, or other companies may have used this, and what it would be used for now. So, but sometimes it's a little bit of a guess, but yeah. And sometimes there's no real salvage value or something. It's garbage. And so that's when you would have, so some of your problems may state there's no salvage, or they don't give you a salvage because there isn't any. Does that kind of give you a kind of a quick overview of that? So that's what we're going to talk about a little bit today on chapter 9, and then in chapter 10 we'll talk about liabilities on the other side of that. So I mentioned, I'm going to erase this here. I mentioned that this is talking mostly about fixed assets, and it is, but there's other things that we can depreciate too. And some of that, and we'll talk a little bit, we have a couple problems that see that, which is patents. So patents are basically not tangible. We can't really hold a patent. But we have a right to that, whatever it is. And over time, that patent loses its value. The reason being is just like a drug company. If they put out a drug, they have a patent on it, maybe good for 10 years. At the end of that 10 years, it's basically useless. It's worthless to them because now generics can come in and just use it and do that. So what happens is we're depreciating that patent over time also, because it may be worth $1 million to us or a lot more than that. And we're depreciating that over time also, because that's our asset, and we're able to depreciate that asset. So that kind of goes into our depreciation expense, lowering our income, therefore lowering what we pay on taxes. But we're just spreading that over time. And so there's other intangible assets. One is goodwill. I won't talk a lot about goodwill because you'll see that for those of you that want to continue on in accounting. You'll see that in Intermediate 1, Intermediate 2, and Advanced Financial Accounting. And then their last one that I do want to talk about is the intangible assets like copyrights, and different things like that, trademarks, those type of things. You'll also see those that you'll see out there also. And they may not depreciate those. I mean, Coca-Cola, how much is that brand worth? Just their name. And that's one of the biggest ones that we have out there, is just that name, Coca-Cola, around the world is worth a lot of money. So they sometimes have to kind of figure out what the value of that would be. And that's sometimes a shot in the dark, but they have ways of being able to kind of figure that out. But that's a value to that company, because obviously that name, that's why people buy companies sometimes is for the name, right? And so that's some of the reasons why. And so that's where you'll see that as a copyright or a trademark. All right, so questions on those basic things. I just wanted to give you a quick 10-minute overview of the chapter, just so you kind of have a good idea of what we're going to be doing. All right, so let's take a look at some of these problems here. Let's start with the first one. All right. So then 9-1A, which is on page 434. That's the practice exercise there. It tells us that they paid $16.75 to install a hydraulic lift and $40 for the air filter for this device, this equipment, excuse me. All right, so we're going to start off pretty simple here. So what is the first entry? This will be on August 7th. What would we make here? Do you have any ideas? And we're not calling it on the hydraulic lift. We'll just call it because it's going on something, isn't it? Yeah. Well, we'll put it under as a delivery truck because we're adding value to that delivery truck. So, because it's on a truck, if I remember correctly. So we'll call it delivery truck. Good thoughts there. So we're adding to this asset because we're making it, it's worth a little more now because we're adding to it. Did I say it was 1675?
Yes.
Yes. Okay. So 1675 here. And what do we use to pay for that?
Cash.
Cash? Okay, so that means I'm going to credit cash for the same amount. All right. And then it tells us that we have that $40. And so we use cash for that, right? So we know that's a credit. I'll put that over here, $40. Now we're fixing some things, so we could probably call this repair or maintenance expense. So either or both, depending on your company, how you want to word it. I'll put both here. Questions? Not too bad. Not yet. We'll get down to here and then we'll start having some questions. All right, let's take a look at the second one then. So the second one, we're going to do a straight line depreciation. Now remember when we said straight line, what we would do. So I'm going to kind of give you guys a moment to kind of look through this problem. So basically what you want to do to get your straight line depreciation first is take a look at it. How much is it, did we purchase it for? What's our salvage? So that tells us how much the depreciation is going to be, and in between there, and then I will divide it by my number of years. So I'll give you guys a moment to figure out what that'll be. And so the first question, it says the depreciable cost. So what are we going to depreciate? How much are we going to depreciate is the first question there. Erase this. I'll give you another moment to kind of walk through that. I'll go over the first part in just a moment. All right, as you're working on that, I will kind of just talk a little bit about how I came up with this. So the first part it asked us, what's the depreciable value? So all I did was I took the total cost we paid for it, minus my salvage, what I have left, and that tells me how much I'm going to depreciate, $415,000. Questions on how I got that at all? All right, the next question then we try to figure out, well, what's the percentage are we going to appreciate? Because remember we did that with that sample I put up there? So we're going to figure out what the percentage is. Basically, one way to do that is take 1 over whatever amount of years that we have. So if I have 1 in 8 years, that gives me 1/8. And then I would just figure out what the decimals would be of that. Which should be 12.5%. That makes sense to everybody? So when we do another one, we'll do another one later tonight where we'll have 25 years. I would take 1 over 25 years, and that means I would do 4% every year.
So this is how you figure out the second part of that problem. So 12.5% each year. Now if I was doing double declining method, I would then double that, right? Make it 25%. And that's what we would do each time. So questions on how I got that answer? I'll give you another moment to work on the third part of this problem. There's two ways you can do this one. This part. The first, you can take the 415,000 times what you have each year, and that will give me what I have. Or you can take the 415 and divide it by how many years you have. Either way. Does that make sense? So it still comes up with the same answer here. I probably would recommend going this way, because just in case when you're trying to figure out the double declining method, how that all works. But you can do it either way. And most of the time when I just try to figure out something simple like a straight line, I just think about it, just divide it. So what does that come up with? 51875? 51875. All right. And so that's what you depreciate each year for the next 8 years. And once I do that, that will take me right down to my salvage value. From this point all the way down to here. All right, do we have any questions on how we came up with that? Thoughts? Like I said, you can do it either way. That's up to you. I might recommend that just because when we do double declining, it's helpful to know that. All right, I'll leave this up here for another moment for those of you that get that down. Let's move on to the next problem, which is 9-5A on the next page. I'll give you guys a few moments to try to figure this out. Should be fairly simple because it's what we just did, except you're going to do it for 3 different values. So the first one, it tells us, I think it's 82,000. We have a salvage value of 16. So we're going to take 82 minus 16 and divide by how many years. It's a simple way of doing that.
Can I ask a question now?
Sure.
So the original value is 44.
Yes.
4,000 or whatever.
4,400. 44.
Right.
Yeah.
So in C, why are we taking the 415 and up to 44 or 440?
Because this is the amount we're going to depreciate over time. This is what we're going to depreciate, because this is what we have at the end of our depreciation. So what I want to do is take this number over the next 8 years, all the way down to here. So I would take 440 and then subtract it each year by 51,875, and then keep bringing it down. And by the end, I should be down to 25,000.
Right.
Okay.
But doesn't the 440 depreciate by the 12.5% each year? Not
Yes.
the 415?
What's that? Yeah, well, that gives us the total of how much we're going to depreciate over time.
Right.
Because if we took it off of this and divided that by 8, we would take that down to 0.
Okay.
We don't want, we want to still have this little bit left over.
I got it.
Yeah, so we want to have that salvage still left over there.
Thank you.
Good, feels good. We'll make sure we get it clear so that that's good.
Okay, you can move on now.
Okay. So all right, so take a look at 9-5A, and in that question again, it has 82,000. What we have for the cost of that, whatever the equipment was, 16,000 for salvage value, And then what you'll do is subtract the 16,000 from the 82,000, and then divide by how many years it has. And that's how much you'll depreciate each year. And you'll do that for each of those problems there, if they're all straight line. I can't remember. They appear to be all straight line. All right, I'm going to erase this and give you guys a moment to work on it. That's how you would set up this problem here. The 82 minus the 16 divided by 12. So you should go up with 64 divided by 12. Be 66 divided by 12. Yes, 66 divided by 12, that's correct, you're right. So it should be 5,500. All right?
Yep.
Okay. Then B, looks like we have okay, so it says determine the book value at the end of the 7th year of use. So how would we figure that out?
Just multiply that by 7.
Is that, yeah, so we'll, yep, exactly. Because this is what we're going to depreciate each year. Times 7. Then we're going to subtract it, because it wants the book value, what's left. So, but yeah, you're right on how much we get to get for depreciation.
Okay.
You're right on there. So you're right that we're going to depreciate, looks like 38.5?
Yeah, 38.5.
38.5, and that gives us 43.5. That sound right? All right, the last question says, assuming this, that at the start of the 8th year, the remaining life is estimated to be 6 years, and the residual value is estimated to be 12,000. So, now we're going to get a little complicated here. I'll give you guys a moment to kind of think through it. So you want to determine the depreciation expense for each of the remaining 6 years. Now, since this is the end of 7 years, right? So we know what the value is starting at the beginning of the 8th year, because we already figured it out right here. So on this one, we have the value 43,500. That's what we have. We know that. Then it says we have, let's see, the useful life of it, or the, excuse me, the estimated, the residual value is estimated to be 12,000. So we need to take 12,000 away from this. And then we have 6 years left, right?
Yeah.
Okay. So that's how you, so that looks like 31.5 divided by 6, which is 550. All right. That's good. You'll see a couple little nuances to it where you have some different changes you'll make. As long as you can grasp the concepts of the given salvage, how many years, and then figure out what those years are, and then redoing those, be okay. So just so you know, this is similar stuff that you would do a little bit more in intermediate twos. So it's not that big a difference other than you go a little deeper into it. This is stuff I worked on a couple weeks ago with my intermediate class. But just a little deeper with how to journalize all that stuff. What's that?
No thanks.
Glad you do without the journalizing.
Oh, then our last problem that we'll do tonight is all journals. It's about 12 numbers.
I can't remember how many overs.
All right, you guys ready for 9-6 here?
All the way.
So this is the exercise 9-6. So you have to flip the page. All right, I'll give you guys a moment to take a look at that problem and see what your thoughts are. Now this one is similar to the one we did in the first problem here. At least B and C is similar. So in this first part of the problem, it asks us, it basically states they replaced a transmission at a cost of $1,890. Now because we're replacing the transmission, you may think, wait a minute, that's an expense. We have to spend that. But one of the things we want to look at is what we're doing too with that transmission. Because we depreciated that truck probably over time, and so it's probably down to about salvage value. So what we need to do is actually put more money back into that because now we've added a new transmission into it. So it should last us a little longer. So that's the reason why we're going to do this a little differently than we probably would have thought of in the past. So what you do is you debit accumulated depreciation. Truck. The reason we're debiting that is that we're adding back in the value of it. Because if we're debiting that contra asset account, we are taking away from how much we depreciated. And then the next thing is we would have cash, because we had to pay for that somehow. So we're adding value back into that truck, because that's what we've done here, is now it has a new transmission. It's worth a little more now, because now what I had valued it at, maybe it was $1,000 left over. If I have a new transmission in there, it should be worth more, right, by putting that transmission into that vehicle. So by debiting that depreciation, accumulated depreciation there, that changes what the value is on there now. The reason we don't want to do it to the truck is we haven't really totally changed the asset of the truck. We've repaired something rather than adding something to it, which is the next question. The next question, we are going to add something to it. Remember we did that in the first problem? This is similar to that first problem we did. So why don't you take a look at B and see if you can figure out what we would do there. Remember that first problem, what we had?
So B would be delivery truck as well, because the oil change is considered a maintenance.
Yeah,
Like the-
exactly. So this would be delivery truck here. how much did we pay for that? $13.50. All right. And we pay with cash on that. And then we would have repair or maintenance. And that was $55.
So how come the hydraulic lift isn't considered?
Accumulated
maintenance?
depreciation, or they get
Yeah, because I mean, it's a maintenance thing. What, it doesn't tell you whether or not the old
It's-
hydraulic lift was bad or if it broke.
because the way it states it, and I think that's where it becomes a little tough with some of these questions here. But it says installation, so we're assuming that's a new thing that's being added on,
Okay.
since it says installation. Rather than fixed, repaired it, or whatnot. So if we would repair it or something like that, then it might be under repair and maintenance there. The oil change, that's what you typically have, is on that. Reoccurring. Oops. All right, questions on this one? So again, we had the cumulative depreciation on that, because we added a new transmission into it. So we're changing the value, raising that value of that truck up. We're also raising the value of the truck because we now throw in a hydraulic lift as a part of that. And then we had to put out some money for the oil change for that truck. All right, any questions? Let's move on to that one. All right, let's move on to 9-13. Which is on the next page on 439. I'll let you read through this problem. I kind of gave you a hint already by some of the stuff I put over here and how to figure out the depreciation on that. Give you guys another moment to kind of figure everything out there. So that's the value of it. And we'll take away our salvage. So, you guys still working on it? Give you guys another moment to figure out exactly what that is. All right, so what do we have? $8,400. All right, 8,400. All right, so that gives us what we have each year. Now, the next part of the question asks the amount of depreciation for the first and second years computed by the double declining balance method. So what percentage are we doing it by each year on that first one? We're divided by 25 years, but what's the percentage that we would take off?
What percent?
So it'd be 4% right here, this is what we have. So what we're gonna do is, in the double decline method, we double that, right? So now it's gonna be 8%. So for the first year, we'll figure that out, it's 240 times 8%. And everybody needs some help. Is that it? I hope? I'm guessing here.
$19,200.
200?
I think.
Probably is right. Actually, you are right. Oh, I was guessing. I was doing the math in my head. Trying to figure out that. All right, so the next, so that gives us year 1, right? That's year 1. All right, how do I figure out year 2 now? Year 2 is a little different because now we've depreciated that much. So what we're going to do is for year 2 is we have 240 minus the 920. Now we've depreciated that, and then we're going to multiply that by 8%. Does that make sense how we did that? So we're just taking it away. So for year 3, after we get this value, we will take whatever this was minus that value, and then multiply by 8% again. And just continue to do that. So as you can see, depreciation will slowly decline on how much it is. It won't be as much each year. But we took a big chunk of that in year 1.
Then 17,664.
17,664. Okay.
664.
Okay.
So you said, and then we take the 17,664 minus the 240?
No, minus whatever this number in the value is here.
Oh, okay, and then
Yeah.
you.
Then you do it again. So if we were to
Okay.
do year 3, let's do that. I just do year 3 for just so we have a good understanding of it. So we have this on 240. It's 2,800.
Yep.
Okay. Minus the 17,664 times 8%. And that's what we do year 3. 16,250, 88 cents. Coffee. And so that's what you'd have for year 3. Now we didn't have to do that for the problem. That's what you'd do. And then continue on till whenever it asked us to do. Until we get to the end. And remember, when we get near the end here, we can't go below that number. That's my salvage value. This is what I state it should be worth. So I'm not going to depreciate more than $210,000 over that time. I'll just do it a little quicker, as you can see. And then by the end, you're not doing very much. So tax purposes wise, you see how much, look at this big difference here. So I have a depreciation expense of $19,200 versus a depreciation expense of $8,400. So my net income will be a lot less under this. But near the end, it'll be a little different. But we may have other equipment we purchased at that time, and we may do the same thing. And so we're just pushing the taxes out.
So I think the last question on chapter 9 homework is like this, but it gives you more information that you have to do. So that's when I
Yes.
gave up on, I was like, I'll worry about that in class.
So that was, this should be this one here.
Oh, okay, that's.
That's
probably-
the
yeah,
last
it's
one, I
like really
believe, so.
long and-
I purposely took the last problem, and I want to go over the last problem on each one of those.
Okay.
So, we'll give it some time to take a look at it. So why don't you go ahead and look at P9-2, and that is the super long one in that
Well, I'm
question.
glad I waited then.
And just know that I will usually go over that, whatever the last problem is,
Uh-huh.
in class here.
Oh, okay.
So that way, you guys have at least one that's similar to what you'll be working on. Am I okay to erase all of this?
Yeah.
All right, it's gonna give me, I'm gonna give you guys some time to kind of look at it. That'll give me some time to kind of set all this up on the board here. And it's gonna take some time for me to write everything out. All right. So let's kind of review the problem here, and then we're going to kind of walk through each of the steps. The reason I've set it up this way is so that we can see all these and compare all of these. I'll probably do some of the calculations down here. All right, so for the first part of the problem, it says, well, let's just start with straight line depreciation. So we're not going to worry about the hours. So as you're looking at this problem, do not worry about the hours until we get to the units method. That's the only place that's going to be worried about the hours. Okay? So as you're looking at that problem, let's hold on that for a minute. So let's set this up. And so as you can see here, we have $135,000 for that packaging equipment we purchased. And we have a useful life of 3 years. As you can see, I've set up 3 years there. And we have a residual value of $13,500. All right, so to figure that out, I got to figure out my straight line, right? What I'm going to do each year. I have 135,000 minus 13,500 because that's my salvage, my residual value, whatever it's going to be.
So this is number one.
This is number one. Yeah, and we're going to kind of, I'm just going to do each of these methods, and we'll be able to plug in some of those answers for all of those. So I'm going to walk through each of these by setting it up in this table here so that you can answer each of those questions. So this will give me my straight line depreciation. So I have 135,000,
For
13.
2012.
Yeah, 2012, all of them, because they're all the same.
Oh, okay.
Get straight line. So how much is that? Looks like it's, I should figure that out. What would you guys tell me?
40,500.
40,500. So this is what we are going to depreciate over the time, each year, in straight line. So I just took the total amount we paid for it, minus our residual value, divided by the years. So straight line is pretty easy. So each year we'll do this. All right, so that gives me a total of 121,500. Which should be the difference of that, those two, right? So that's what we're going to depreciate. All right, next is the units method. Let's talk about the units method here. So in the units method, we've got to figure out each unit and how much it costs. So to figure out basically what it costs per hour for each of these, we're going to figure out all the information here. So what we're going to do for this part is we'll take the 135,000 again, minus what we're supposed to have at the end for residual value, and then how many hours do we have total that we are going to use this equipment for, this packaging equipment?
8,600.
8,600 total?
Is that right?
Double check that. I thought it was a little higher than that.
Or is it more the 18,000?
Yeah, it's 18,000. That sounds about right. Okay.
All of the equipment was used for 8,600.
Yeah, so then we'll go through each year on that. So what this tells us is how much it costs per hour. We're depreciating there. So how much is that?
6.75.
All right, 6.75. Beautiful. All right. So in this problem here, it tells us how much we have in that year. How many years? How much do we use that first year? So I'm gonna bring it over here, so we can kind of do some computations over here. So, well, how much did we use that first year in 2012? How many hours?
2012.
Yeah.
8,600.
8,600. So we're going to take 8,600 times 6.75, and that will give me my depreciation with that. How much did we come up with?
58,000.
58,050, okay? So the next one, how many hours did we use it for in 2013? $5,300. All right, so we have 5,300, and we'll multiply that by 6.75. Anybody have that one?
35,775.
35,775. You guys can read that. All right, and the last one, we have, oh, my math is right, it looks like 4,100. So 4,100 left over, and we're going to be using times 6.75. I'll let you do that one. I can't do it over my head.
27,675.
27,675. All right. Adding all those together, I hope that comes to 121.5. It should. So again, we depreciated that amount both times. So as you can see, the values are different on how much we use that. Did it come out that way? Make sure we're right there. Oh, this one's not right here. Yeah, this should be 58,050.
Hey, there you
Is it right now? Okay. I must have misheard. So again, we depreciated that amount. So everybody had a pretty good understanding of the units method. Basically, we just distributed it by how much of the units we used and how many hours that we used on that. That's how we're distributing all this. So straight line is basically the same exactly for 3 years. This is by how many hours it took us in each of those unit methods there. Now the double declining method is a little different. Remember what we have? So we did the double declining method on a couple different problems. I'll kind of let you kind of work through this one on the double declining method. You saw the last one that we did. So we got to figure out the percentage of how much we're depreciating in each year. Oops. We have the 130. I think it was the previous problem sitting on my head. 135. So on this one, what we're looking at is, when you look at the straight line, we're depreciating it by 1/3 each year, right? Because with 3 years, 1/3 each year. So for the first year, we're doing double declining, we're doing it by 2/3. Now I did it in fraction because it'll probably come out to a better number that way, because otherwise you'll have lots of decimals if you do it by 0.66, you know. But you can do it either way. But just remember to round it to where it should be. So what did you come up with here? So I'm taking 2/3 of the full value, which is 135. 90,000. Okay, so doing that, I got 90,000. So that's my depreciation for year one. Wow, that's a lot. All right, so I have 135 minus 90,000, and then I'm going to multiply that by 2/3 again. So I'll have, looks like 45,000 times 2/3, which should be 30,000 if my math is right. Go ahead. 30,000. Now what you're going to look at here is go, okay, well we could take, that means it gives us, about 15,000 left over, right? So that gives me about 15,000 left over. The problem is I'm only supposed to depreciate that much. Remember, because I have to have a salvage value of 13,500, right? So that means this last year is only going to be 1,500. Because I only can depreciate it to my residual value.
Okay, could you go over that again, where you got the 15,000?
Well, the 15,000 is basically the 30,000 minus that 45 right here. Because that's what I would do next.
Gotcha.
Yeah, that's what I would do next. So, yeah, I'll just do that way. So we have 45 minus 30 times 2/3. But because I only have that much left to depreciate, I just do that much. That's it. And so as you can see, they all equal. So let's look at some of the questions now. We've done all of this. We can now figure out each one of those questions. All right? So questions on how I did the double declining. All I do is each year is I double the percentage that I would have taken. So remember, it's 1/3, now it's 2/3. That's why I did 2/3.
How did you do a problem if it didn't come out where?
What's that?
How did you do a problem with the straight line didn't come out to be thirds or anything? They were.
Whatever they may be. So if it's 6 years, that'd be 1/6.
Oh, okay.
So you can do like
So you-
2/6
okay.
or 1/3, or yeah. So remember, it's just 1 over whatever years you have.
Okay.
And so yeah. And you can figure it out by percentages too. Like I said, I just use the fraction because I want to come up with a whole number. All right, so the first question asks, I guess it basically asks us to do that. Yeah, it asks us to put all those in columns, do all of those things there. The second question is, what method yields the highest depreciation expense for 2012? Well, simple, we put this together, we can figure that out. This is the highest right here, 98, 58, and 40. So, double declining method. And then the last question says, what method yields the most depreciation over the 3-year lifespan of equipment? Well, they're all the same. They all should be the same. So there isn't any one that yields more because you say one all the same. So there's no difference.
What were you saying for number 2? For the method yields the highest depreciation expense for?
Depreciate, right, this one here, double declining method,
Uh-huh.
because it has 90 versus this one's at 58 and this one's at 40. So which one's at the highest? They were just looking at 2012. Now if they ask the question, which was the highest in 2014, well, it's this one.
Okay.
Yeah.
That makes sense.
And that's why I kind of wanted to do this all first, because it kind of led into all the other questions. And so this should help you with that problem, because it should be similar to this one. What's that?
It looks a lot easier.
Good. So that is the last problem on the homework, very similar to the last problem. Obviously, they changed numbers around, but it should be very similar. Yes, sir?
That's probably a really stupid question, but why is it that we can only depreciate 121,500?
Because we said that our residual value at the end of this, at the end of our depreciation, would be 13,500. So we can only depreciate it down to that point. At that point, we can't depreciate anymore. Because if we took more depreciation than it's really worth, we can't go into the negative on something there. So we have it saying, this is what's going to be worth in 3 years. So we just can take it to that point.
Thank you.
Right here.
Yes,
Any
on
other
that
questions?
Yes, on that last question, that you figure out the 1,500,
I just added these two together, what I've done so far, and I know how much I'm able to depreciate, which is this amount, this minus this. Gives me a, which is the, this number.
Right.
So that's all I can depreciate, so I took that number minus what I depreciated so far. Because I knew I would exceed that, yeah, because I knew I would exceed that number.
Right, okay.
All right, how we do with that chapter?
So
Yes.
where does the 2/3 come into play?
What's that? So in the double declining method, you take the straight line, method, which you had, and you double it. So if I was depreciating each year by 4%, I now move that to 8%. And I do it 8% off of each year.
Okay.
So that's where, so I did it by a third, now it's 2/3, and I'm gonna take 2/3 all the way down until, so as you can see, it bunches it all up at the beginning. Especially even if you push it out 10 years, if you get a 10-year one, you'll see it all up in the first few years, how much we're depreciating. Any other questions? Is this making sense together? Not as bad as some of the other chapters?
Chapter 7.
All right, you guys ready to take a break? And then we'll jump into chapter 10. Let's take a little break. Now I will